this is Martin from SIDEWAYS, the channel for learning about trading and investing. Welcome to weekly stock market analysis show, where we look at the technical charts and then try to understand what happened in the market during the previous week and then accordingly plan for a better trade for the upcoming week that's starting tomorrow, February 3rd, Monday 2024. So let's deep dive. It's a bird view. Price has been falling. There has been a correction that's happening, and you can see a good bounce that happened well within a trend line. But an ascending wedge rather. And on the daily of Nifty 50, by the way, this Nifty 50 charts weekly and right side daily that you're seeing. Nifty 50 also clearly showing a channel move towards the top of that trend channel. And Banknifty, you can see an ascending wedge, and the price has fallen and bounced from the bottom of that. Daily of the Banknifty is showing that similar move of a good bounce from a trend line channel. So what exactly happened last week? So this is the story. It's a bounce, clear bounce, and market close positive 1.69. That's 390 points up, very positive, above the 20-day exponential moving average. And the correction meanwhile had extended to 13.3 in the Nifty. But remember, it's a 72% rally from 2022 June onwards. And Banknifty also bounced up with 2.3%. That's 1,149 points up, with a correction for like 12.1% from the top. And that also managed to close above the 20 exponential moving average. And here we have a bullish engulfing weekly candle. That's what it is. And what small candle you see is that of the budget day. That's a doji in this see, nothing much happened there, but the real thing is the bullish engulfing, which is completely engulfed the previous two candles. Banknifty also done the same, bullish engulfing with open low, heavily bullish candles on both. So that was probably the budget expectation move. We never know that, but regardless, it's a weekly bullish engulfing that's no doubt bullish. And daily charts, you can see that the last 6 days, including the budget day 1, 2, 3, 4, 5 candles, was clearly a small dip that happened, and from that dip, from Tuesday onwards, it started to move up and ended up with a flat close on the budget day. Same thing happened. Like on Monday, we have a from the Tuesday we have a very good gap up out of the budget, and then following Fridays we had a bullish up move continuously, and Saturday ended up kind of indecisive. Bullish bands, so clearly now showing a contraction. It was continuously expanding on the downside for all this time, and now we are seeing a contraction with a bullish bias because it's above the median 20 moving average. So bullish bias of the Banknifty also is bullish bias, but sideways contraction. So sideways contraction is what bullish bands is talking about, right? So that's in a nutshell. Let's move ahead and try to understand the momentum. Momentum also has climbed sideways and maintaining that on both time frames. Sideways and rising up on Nifty and the Banknifty. Weekly charts on the left side. On daily charts also we can see that sideways and rising up. So momentum is still sideways, but trend indicator ADX, momentum we are using RSI, trend indicator ADX is showing that it has crossed all the bull zones in the short term, but not yet into the bull zones. It remains bearish on the medium term. That's in a nutshell. Meanwhile, the big thing is the VIX was spiking up heavily, and it went as high as 17 or 18. In fact, above 18 also, I think. That's natural before a major event like budget, and it cooled off one day before the budget day itself drastically. Around 16% of fall, and it has now fallen down below the medium volatility limit of 15. So 14 is the VIX, India VIX. So India VIX cool off has happened. Right. That also gives bulls the hope and all this. There is a probability for correction. So VIX is falling, which is crashed, and there's no rising VIX. Fear is gone. So that's what you can understand. Now there is no small correction. This is Feb 6th. This is Feb 6th, and this is Feb 28. Sorry about that. So this is actually long unwinding, which is also bearish in nature. So that's about the futures open interest and the of Banknifty. So Nifty, it's short build up. This is the budget build up that has happened on the futures basically. That's negative. February 6th Nifty just for the options is showing that there is a 0.8 and it's 0.8 on Banknifty also. So which is bearish, of course, but it had gone to the 0.5 put call ratios. Remember that. So that's a good thing that it has headed towards the 0.8, closer to the 1 PCR, but it remains positive. So here is the open interest. You can see it February 6th weekly expiry. You can see that it's maximum put writing is seen at 23,000. Second maximum is at 23,300. So 23,000 is going to be good support, and then maximum call writing is seen at 24,000 and then 23,500 after that. So that's on the Nifty. And Banknifty, the monthly expiry February 28th, they're showing that 49,000 and 50,000 is where the highest put and call writing is seen. 48,000 and 15,000 is the levels of support resistances after that, the second highest. And put call ratios are all bearish, not at one, heading towards bullishness is what you can say. And long on winding build up only Nifty and short build up only for budget day. That's what you're seeing, the futures are. So that's it. Now, this is one way of understanding support resistance. Another way would be to find support resistance on the graphs using the expression moving averages, previous resistances, previous swing levels, rounding numbers, Fibonacci's, and all that. So you have the charts for that here. So accordingly, you can see that the first resistances would be the Fibonacci 50 that's coming at 23,750 nearby. After that, you have 23,893, 100 expression moving average, and 24,000 is going to be major resistance. After that, 24, 226, and 24, 324, like likewise. Major support for comes in Fibonacci 61 at 23,154. But we have the 23,340, 20 expression moving average support that comes before that, and then previous lows at 22,786, and before that 23,000 big rounding number support is also there. And if that is breached, it goes to be 22,500 and then 22,346 for the previous resistance, and the Fibonacci 78 retracements are there. Similarly, the Banknifty, we have the major resistance near the 200 and the 50 expression moving average that is coming at 50,286 and 50,227. That's it. And after that, 100 expression moving average. 50,000 is a big rounding number. That's called major resistance. If that is clear, then 51,000 next and 51,186, and in between we have 56,83 where the 100 expression moving average that supports. Similarly, downside 20 expression moving average support will come at 49,336, then 49 rounding numbers support will come, and then previous swing low before that 48,000 is also there. Previous swing low comes in very close to the 48,000, 47,876. That's how it is. That is breach, it goes to be 47,000 rounding numbers. So that's about the Banknifty support resistance levels. Detailed things are mentioned here. We can correlate that with the open interest support resistance levels, and then conclude the place where you had to bet on the support resistances, right? Let's move and try to see this different sectoral indexes. So what has happened there is because there was a big bounce up that has happened in the auto sector, FMCG and reality. Auto and FMCG and reality did really well. Reality made 11.5% up, and FMCG is 4.5%, but the auto is 5% up. So what has not done good is IT, the metal, and the pharma. Pharma is only 0.5% down, but IT and metal 3.5% and 2% down respectively. Charts of the same are mentioned here. So you can see that all these sectors are maintaining the medium-term sideways momentum from the RSI momentum perspective, right? And here, you can see the price mentality that is happening after it has hit the top, and metal is struggling to hold on the channel bottom, and auto is somewhere in the median of that panel channel and trying to end the correction there and bounce up. Pharma is sideways and falling, struggling to hold on that parallel channel. FMCG is trying to bounce up from the bottom of the trendline channel and just climbed sideways and rising up. The LP is also bounced up from the bearish zones to the bull zones. Now, if you look at the industry heavyweights that contribute maximum to the index, HDFC Bank is also trying to bounce up sideways and then once again climbing back towards the all-time high that very close to the 1,850 that it had made earlier, but it's sideways momentum. Then it's also climbed back to the sideways with a bullish divergence, which is indicating that there is a possibility that it can move up towards the top of 1,600. So that's very positive, but the momentum remains sideways. Even the ICICI Bank, which has corrected substantially, and now it's trying to attempt to move the sideways rising. So all three heavyweights sideways. Now IT stocks also sideways and falling after some correction following the DeepSeek release in China. So there's some correction that has happened, and then it maintains a sideways momentum. Correct bank is climbing the bull zones in the medium term, and it is a contrast stock and that trying to move in the sideways forever. IDC is also meaning that sideways and trying to move up, break out from that cup and handle, and if the consumption stocks are all moving up, FMCG is moving up after the budget, and there is a likelihood that it can make all-time highs now, IDC. So IDC is very positive, and but otherwise the fact is that none of the money bulls on all the heavyweights, so it's heading towards that though. That's very positive. Heavyweights have really done well, but it's not as bullish. But the sectoral indices climb back to sideways, but long way to go before it turns bullish. That's in a nutshell. And now the broader markets, if you see, it has found some bottom on the channel bottom, and at exactly the RSI 40, it seems to have taken a twist. So the correction might have ended here. We'll have to wait and watch. But if that's the case, then it's a long way up. Right. So it seems to be consolidating and then staying at a support zone of the momentum and the price is what you see on the market, on the mid cap and the small cap of the indices. Right. Smaller markets also. Last week, if you see, there was there's some consolidation. It's not ready to go down, is what it indicates. It's taking the outside support as now. Now, moving ahead, if you try to understand the institutional participation, you can see that the FIs once again have heavy sellers, nearly 20,000 crores of selling has happened, and the domestic institutions have been buying heavily on the India story. 20,470 crores of buying, and net it's positive, but FIs selling is trouble. That remains to be there. Derivatives net longs have moved up last week. Right, that's about institutional participation. And then moving ahead, if you try to understand the global market, the US market, the currencies and the commodities, you see that there is already a spike of 1% up, just, and rupees once again weakened to 86.5. Right, so it's having bullish momentum, and that's trouble. Dollar is strengthening, and rupees weakening is trouble. That continues to be trouble for emerging market like India. Crude oil has fallen down, has cooled off after the Middle East crisis, has cooled off a little bit. It's only 3.75 right now, and gold is also spiking, which is a worry because equity market has been weak and correcting, and the gold is spiking out. They're trying to break out and make new all-time highs. What it looks like. And in fact, the hedging instrument, gold rising is good, but for a falling market like ours, when gold is breaking out, it keeps us worried that people are shifting their money to the safer havens or not. Moving ahead, the US markets, if you see, it had some correction because of the deep seek last week, but managed to bounce back and then did not correct too much, although end to end it managed to close right up to 0.25 to 1% of correction is all that has happened in the S&P, Nasdaq, and Dow Jones. So Dow Jones managed to close slightly. So overall is right. US markets did not perform well last week. It has fallen down, and then bullish falling is what it is overall. Major US markets, if you see. So in a nutshell, it's not very positive. If you look at the commodities of gold and dollar and the US markets, right? Crude oil is falling is good. That's all a positive thing if you look at the global cues. So that's about that. Now actionables and two topics that for learning purpose can be understood. So one of them is Jubilant. It looks like a breakout of a rounding cup and handle pattern. 1:1.5 RiskReward can be looked at, or 1:2 also can be looked at. Given the fact that momentum is rising up in the bull zones and trend is also across all the bull zones. Apple looks like a chemical company. The chart is showing that there is a short side trade scope. This is 1:1.6 RiskReward can be looked at. Momentum has fallen to those bear zones. Trend also has fallen to the bear zones. It's in a parallel trend channel. A lot of scope towards the bottom of that. Right. So that's Apple on the short side, and Jubilant footworks on the upside. Now, FL strategy for actionable for next week is kind of a bad man with fully hedged on downside and not hedged on the right side. 24,000 nearby. If it breaks out from that, we'll have to just exit. That's the strategy. Just about it's reasonably okay. It's not completely hedged. Make note of that. It's not hedged on the upside. So if it breaks out about 24,400, then yeah, we simply exit. Or let's hedge it, reduce loss. So this is kind of a bad man with one side hedged. Basically, we are Batman is nothing but we are selling twice as that of what we are buying as hedge, both are OTMs, and hedge will be for OTMs. And the price, if it remains over this range, then you don't make much profit, but still you make profit. But if it spikes up upside or downside up to the limit range, then you make more profit. And if it really crashes down, still you make small profit but not make losses. And on the upside, on the downside, if it breaks out really on the upside, then we have trouble. Just have to exit, and otherwise we'll start making losses, right? So exiting at the right time is very important. So this is FNO Nifty options weekly Batman strategy with one side hedged is what we are seeing here. Margin going to less because one side is hedged. The side also, if you're hedging, your profit will reduce, but it will become hedged. So in order to increase little profit more, lot size and all that is depending on the capital size and the risk appetite, right? So let's just wrap it up. So market has managed to bounce up, and it has closed positive after a budget volatility week that went by, and the correction extended 13.3 on the Nifty, and the price continued to sell. That's the story. So overall the correction is 13.3 to 12.1 Nifty and the Bank respectively, but we had a nearly 70% of rally that happened from the last 2-3 years. If we try to bucket together what factors have in favor of the bulls and the bears, bulls have few things. First thing is the bullish engulfing weekly candlestick pattern that has formed. Momentum climbing in sideways zones, and short-term momentum turning to short-term trend turning to bullishness, and bullish demand is turning sideways and bullish biased. These are the factors that we can say it's in favor of the bulls, but a lot of things are still in favor of the bears. FIs have been selling spree forever. US markets are not that great last week, and open interest remains bearish with PCR also. And the futures are all bearish. Lower high pattern still there. And secondary indices are sideways but not bullish yet. Medium-term bearishness is there with respect to the trend. Medium-term bearishness for the Nifty and the Banknifty both. Right? It's still bearish on the medium term. So just to close over to the bull zones. And heavyweight stocks remain sideways, but the market also remains sideways, and not that bullish. That's what it's indicating. So gotta be very type stopped strategy that is applied, right? So those variance and all this could create volatility. So because the market is mild bearish even now as per the charts, right? So keep that in mind that whenever there is a black swan that happens, technical analysis of no good. Keep that clearly in mind. Technical analysis only for probabilities in the normal markets. Major events and spikes of black swans, technical analysis does not apply. So the next week, 22,000 and 24,500 is for the levels that I look for the Nifty. 47,000 and 50,000 is the levels that I look for the Banknifty. Now, as long as this 26,000 and 52,000 is not clear, we're still consolidating or we are correcting. Either that. Right now, we were correcting for the last 7 weeks and now trying to consolidate now. So consolidation is what we basically are getting into what I think. So, yeah, always protect your positions with proper hedging. Always protect your portfolio also with proper hedging, and have tight stop loss in individual trades that you do mandatorily. And you may use options strategies for making money when the market is correcting. Check out the playlist for more details on that. That's all. Market is turned from bearish correction temporarily into sideways. We have to see whether it sustains or not, right? That's all I have for the week. So if you like the content, subscribe, put in your comments, and like if you like it, and then share it with friends. I'm active in the other channels also, mostly active in the Twitter or X, and regularly post technical analysis there. So if you want to subscribe, you can subscribe that as well. That's all I have. Happy trading, happy learning, happy investing. Bye bye.